Good afternoon, everyone. It is 1 o'clock and we're going to go ahead and get started. Welcome to our Wisconsin's Economic Outlook webinar. Just as a reminder, this webinar is being recorded so that we can make it available to folks who cannot attend today. If you happen to have any questions that arise during the program, please use the chat function to submit them. After our free presentations are over, that's when we'll go ahead and start the question and answer segment of our program. If you do happen to pose a question that we were unable to get to within the allotted time, we'll try to circle back and answer your query via email. Today, we're pleased to welcome a special panel from the Wisconsin Department of Revenue. Secretary Peter Barca has served in his current role since 2019, and he previously served in the state legislature and in the U.S. House of Representatives. John Koskinen is the chief economist for the department and previously served as the staff economist for the governor's budget office, Wisconsin Department of Administration. And Emily Camfield is a senior economist at the department who has previously served as an economist at the Wisconsin Department of Workforce Development. Today's program will be divided into 4 parts. Part 1 will cover recent initiatives impacting businesses. Part 2 will center on Wisconsin's economic outlook. Part 3 will present visualizations from the Revenue Department's Research and Policy Division. And Part 4 will consist of our question and answer session. So again, I want to thank all of our presenters for helping us put on today's program. And with that, Secretary Barca, I will share my screen and turn it over to you and your team to kick us off. So thank you again, Mr. Secretary, for joining us today.
Well, thank you very much, Derek. We appreciate the opportunity to be with your group here today virtually. And as far as our standpoint goes, we like to say that in terms of our financial and economic position, we have only good news to share because Wisconsin is doing exceedingly well. If you want to advance the slide, please. Derek, it's my understanding you were going to advance the slides, but is that not the case?
Yes, you should be seeing my screen.
Okay, I'm only seeing the first, Wisconsin's Economic Outlook. I'm not seeing the presentation screen, and then I have we should be on the slide 4, fiscal state of the health. Yeah, there we go. Perfect.
Okay, we'll do that for now.
Thank you so much. Sorry for the delay. So essentially, the great news is that the fiscal state of Wisconsin is the strongest it's been in a half century. And, you know, I like to joke sometimes people say, oh, how do you know that? And I say, well, because John Koskin's been around almost 50 years and he told me that was the case. But we're going to validate that even further by showing you a series of slides that both I'll have and John Koskinen will have as well to show you some of the important data points. But just a few points that you can see in front of you. First of all, we've had major tax relief. In fact, our tax rate drop has been amongst the largest in the entire nation. Our equalized values have been breaking records. From the Department of Revenue standpoint, the lottery credit is the highest it's ever been in our 33-year history. Our fiscal position has improved to such a degree that we now have a AAA bond rating from one of the rating organizations, AA plus from another one. So that's improved significantly. And our Main Street and various infrastructure investments have put us in a much stronger position going forward. Next slide. Because we're the Department of Revenue, we'd like to show you kind of where the money comes from and where it goes. And people are oftentimes surprised to learn that the individual income tax is nearly 50% of the $20.2 billion we bring in each year, a little over 46%. The next highest is general sales and use tax, which is nearly a third. Corporate income tax comes in third position at 12.7%. Excise taxes are 3.4%, and you can see so on down the line. But obviously, the big three are income, sales, and corporate income tax that make up the bulk of the $20 billion we bring in each year. Next slide. Where does the money go? Well, I think we missed the slide there. Slide 6. There we go. Where does the money go? People are oftentimes also surprised to learn that 2/3 of the funding that we bring in is actually sent right back out the door. The biggest one going to school aids. Of course, Wisconsin's always been known to have quality schools. So over a third of the money goes for school aids to help K through 12 education. The next highest is medical assistance to help people in nursing homes, people with disabilities, senior citizens, and others that need special assistance medically. Fourth is actually property tax relief. at 7%. The single biggest expenditure for the state is correctional services at 6.9%, almost 7%, which I'm sad to tell you, because it actually exceeds the UW system, which is 6%. Then you can see so on down the line of transfers, shared revenue, and then the all other at 14%, which I passed over. That's everything else beyond what you see on this chart. So all of state operations, with the exception of corrections and the technical college and UW system. So you can see how most of the money goes right back out the door. Next slide. In terms of tax relief, to make sure that everybody has a clear picture of that, on a bipartisan basis, we've had great success. We've provided $2 billion in individual income tax relief over the biennium. That means that 2.4 million of roughly 3 million tax filers have had tax cuts. A median family of four is enjoying about $800 in annual tax relief beginning in 2021. When you combine that along with the cuts in Act 9 and 10, 10 being the marketplace, and combined with the tax rate cut, wage earners are keeping more in their pocket every year, as we'll show with withholding. And with all, Governor Evers signed into law, he actually run on the idea of giving a 10% tax cut. And we've far exceeded that with 86% of Wisconsin taxpayers, particularly the middle class, which was a focus, getting a 15% income tax cut. Next slide. Other tax relief. There's ongoing income and other tax relief of about $1 billion every single year, which later you'll see why that's so significantly. Next, the governor being a former superintendent of schools, one of his key goals was to get back to 2/3 funding of education. We have not had that in Wisconsin since Tommy Thompson was governor. So it's something that I know legislators in both parties have wanted to achieve for a long time, and we're delighted we're back in that level. It's not only important for property tax relief, it's also important for educational outcomes. So it's a very important achievement that was had. Also, workforce, which was the key issue going into the pandemic and is rapidly becoming the key issue again. $72 million were invested in tech college relief. And then the last two you wouldn't think of as workforce issues, but they actually are, as you'll hear from our economists as well. Many of in Wisconsin, is very few people sitting on the sidelines any longer, as John Koskin will go into some detail on. But, one of the biggest population are people with young children, which are very expensive today. So the governor made it a priority to get to having 50% of childcare and dependent care be 50% of the federal credit. We achieved that. Now the governor's called a couple special sessions to try to get to 100%. If we don't have special sessions, you can bet he put that in the next budget submission. And then finally, something that for decades, legislators, being a former legislator myself, sought to achieve, it was one of the biggest issues for veterans groups. General Knapp, General of the National Guard, it was one of his top priorities. He convinced the governor to go along with it on a bipartisan basis. All active duty income is now excluded in Wisconsin. And this is important not only to honor men and women in uniform, but also because if they keep Wisconsin as their residents, there's a good chance many of them will relocate back to Wisconsin after they complete their military duty. Next slide, as I mentioned, just alluded to earlier, we changed the withholding tables to recognize the tax cuts so that people wouldn't just get larger refunds at the end of the year, but they would have more money in their pocket. Of course, people can select whatever amount to have withheld that they want, but most people take the standard, and as a result, they're having more in their paychecks. Next slide is the governor also has plans to try and cut taxes even further. And again, this is a preview. I know the legislature is not apt to come back into special session during election years for whatever reason. And but you'll see these things, I think, bubble up in the next budget. I think they're common sense ideas that most people in both parties would support. One is a 10% tax cut for working families. The governor called special sessions on this only because we have, we're projected to have over a $5 billion surplus at the end of the biennium, and with inflation on a federal level, you want to put more money in people's pockets more immediately. Also to increase the homestead credit up to $35,000 limit, so more people could claim homestead. The next one, vitally important to veterans group. In fact, there's a veterans task force right now that Secretary Kohler and Blumenfeld are co-chairing together. And it's one of the top recommendations they've heard from certainly the disabled vets, but also one of the very top for VFW and for the American Legion. And that is to expand the veterans and surviving spouse credit to not just have people who are 100% disabled, which few, meet quite that standard, to people at 70%, which many more veterans would then qualify for this needed assistance. Also, with gas prices being high, the governor once before and is continuing to advocate to eliminate the minimum market, which would bring down gas prices. Also, something our neighboring states have, which is capping the cost share for insulin at $35. Virtually every neighboring state or surrounding state have this already. We would like to have this to help people who have medical sensitivity. We talked about the caregiving credit and to expand the child independent care credit to 100%. Next slide. Wisconsin has had one of the biggest drops in tax ranking in the entire nation, and we think it's going to continue because of the tax breaks that have now been built into the system. But over 20 years on a bipartisan basis with both Republican and Democratic governors and Democrat and Republican led legislatures, we moved from having the fourth highest tax load in the nation in 20 years to now being in the middle at 23rd. And, Wisconsin's never going to be 47th or 48th because our harsh winters make us spend more on infrastructure to keep our roads and bridges up. And also, historically, we've always believed in quality education. And as you'll see in a later slide, we're back in the top 10 again. And it's important to have a world-class workforce, which we've always had and want to continue here in Wisconsin. But obviously, we're in a very strong position, which will help us with economic development for years and probably decades to come. Next slide. Our public schools have now ranked in the top 10 in the nation by a couple different indices, Fortune and a couple other have identified. So very important, with workforce being the key issue, attracting companies, retaining Wisconsin companies. You have to have not only just people to fill the jobs, but well-trained and qualified people. So that's very important. We're tied for Minnesota for having the highest SAT scores in the entire nation. And our pupil to teacher ratio is 15-1, which that's part of the reason why we have high SAT scores and other good testing scores. Next slide. Equalized values, I mentioned this earlier, I won't dwell on it, but you can see the statistics there that our increase was approximately 14%. It was the largest increase we've had since 1979 in our residential market, particularly robust increase at 15%. Next slide, important to the Department of Revenue. We like to call the lottery our entertainment division, and we're on a roll, so to speak. You can see the largest property tax credit since our 33-year history. And overall, $343 million of almost $900 million that we brought in have gone back for property tax relief. And my lottery people would be upset if I didn't emphasize the fact that they like to call Wisconsin Winsconsin, because we're kind of an average size state, average size number of lottery tickets we buy, but we're fourth in the nation in terms of winning. So if you're going to buy a lottery ticket and you're near the border, don't buy them in Wisconsin or Illinois. Buy them here where we're lucky in Wisconsin, so to speak. Next slide. As I mentioned, our fiscal health is the strongest that we've been in a half century. We projected in October 15th, DOA will give the final numbers, including expenditures, but on revenues alone, we ended with a $1.6 billion over the estimates. And given the preliminary numbers, it looks like we'll end up with pretty close to that in terms of our surplus for this year. And we expect to close out fiscal year 23 with over a $5 billion surplus. When I first came back to the legislature in 2009, we had deficits as far as the eye could see. Legislators even took furlough days to help with the fiscal position. Now we have surpluses as far as the eye can see. Very important. And even for you finance geeks out there, even using the GAAP accounting system, we still have more than a $4 billion surplus projected, which is just unheard of in the last 5 decades. And on top of all that, we're sitting on a rainy day fund that's chock full, the highest it can be under the statutes at $1.7 billion. Next slide. On bond ratings, I mentioned those earlier. We're at a AAA bond rating for the first time in 40 years by Kroll. We went from AA plus to AAA, and even S&P. We're back up to a AA plus, which we also have not been in decades. So we're in a very strong position. It was great to be on the pitch team, which of course the governor led, and DOA played such a vital role. And so we heard from our bond rating agencies that they were obviously impressed, and that's why with the position that we're in financially, and that's why we got that rating. Next slide is on the Badger bounce back. Through the pandemic, Department of Revenue played a very big role along with DOA on this. We supported more than 100,000 small businesses in the state. And we gave out more than $100 million to Wisconsin farmers through the Wisconsin Farm Support Program. More than 20,000 farmers were helped in over half of the 72 counties. And of course, WDC played a big role with the Main Street bounce back, which has really also played a big role. And you go to the next slide, you can see that overall, we've given out more than $1 billion in support for small business, tourism, lodging, entertainment, and farmers. And most importantly, in the next slide, we were #1 in the nation for returning funds back to the people of Wisconsin. We're very proud of that because we think that prudent fiscal management, the governor and the Badger bounce back in cabinet, we were meeting daily in cabinet meetings. And one of the things that he emphasized, we've got to help businesses so they come out on the other side of the pandemic still being in business. And for the most part, we certainly achieved that goal. And we thank our partners in the private sector and CPAs, who we work particularly close with at the Department of Revenue, because we know they played a vital role as well in helping businesses to apply for these funds and to be able to make sure we got the money back to people. On the next slide, we talk about the Main Street bounce back. I've been going around, as I know Secretary Blumenfeld has as well, and Secretary Missy Kincaid at WDC, as well as others, talking to businesses and how the grant program worked. And we heard a lot of positive programs on the Main Street bounce back that WDC has worked so hard on to help give $100,000 for vacant commercial spaces. And what that means is we actually have more businesses now than we had pre-pandemic, which is a remarkable achievement. Next slide. As you can see, there's still work to be done following the pandemic, mainly in things like workforce, economic development, personal property tax repeal, which we work very hard to try to achieve. And so that's, very vitally important. Next slide. Infrastructure, we have really put a huge emphasis on transportation. As you can see, we've kept 375 transportation projects on track, 1,700 miles of railroad, 1,250 bridges, as Secretary Thompson would tell you. And we're very proud that over $105 million was reallocated to other states that we brought into Wisconsin. Also broadband, vitally important, $105 million in federal funds. We know how important that is today. Next slide. We like to end just talking about how important it is to protect against fraud. We spend millions of dollars to protect your identity. And we just want to encourage all the small businesses and organizations out there, keep your firewall, your malware and antiviruses up to date. It's real. We get alerts from Homeland Security all the time. You need to protect yourself. Next slide. We created a Badger unit, Business Development Government Relations, to help businesses. Please don't ever hesitate to reach out to us. Next slide. I'm just previewing what Emily Camfield is going to talk about, our Research and Policy Division. So I'll leave that to her. And then our final slide, I just want to say thank you for the opportunity. And if you walk away and you think of a question we didn't answer, you can always email me at dorsecretary@wisconsin.gov. We promise to get back to you promptly. Thank you very much. Great to be with you all and appreciate the opportunity.
Thank you, Mr. Secretary. And now we'll hear from John Koskinen.
And if I have it right, I'm going to do my own presentations from this side of the world here.
Correct.
All right, let's roll in. And we will do slideshow from the beginning. Famous last words. There we go. All right. What we're going to do is do a quick recap here of what happened during the COVID contraction. For those of us who had to live with it, the COVID contraction was the worst economic contraction in US economic history for a single quarter. Real GDP followed a 5% decline with an over 30% decline in second quarter 2022. In order to avoid the economy from sort of spiraling down a drain, when you're seeing the economy unwind that sharply and unemployment spiking by up to over 16% in the course of a grand total of 2 months, you don't sit back if you're a federal policy decision maker or you're Federal Reserve and just let it continue to unwind. You decide that we have to intervene sharply to prevent the economy from engaging in further collapse. There were actually 3 rounds of federal stimulus designed to prop up the national economy, and you can see that impact in the Wisconsin economy. On the left side of the screen, you'll see what Wisconsin personal income looked like without the stimulus, which is the red line, and you see that sharp drop in second quarter, and you see it with the stimulus, in which case the federal support provided more than enough to let the economy continue to grow. And now we are in a self-sustaining position without the stimulus funds, with basically phasing out the stimulus funds. You can see on the right that the 3 tranches of the stimulus, 2 of which came in first quarter 2021. What I want to note in particular is what happened to proprietary income between Paycheck Protection Program and CARES support. We allowed small businesses to stay afloat during the worst of the economic contraction as everybody came forward. All of those funds are now basically fully phased out. But again, you see the sharp contrast between what we actually had as a result with the stimulus funds and what it would have been without it. That prevented the wider economic collapse. The same is also true on farm proprietors' income. This does have a property that you'll see later in terms of the vitality of small businesses in the state of Wisconsin. As a result of all of these efforts, now it may have been in the worst economic contraction, but it was also the shortest. Fortunately, only lasted about 2 months. And the recovery was also the sharpest in US economic history. Now, for us, we can sort of chase how we have been faring in the recovery and our current economic conditions. For housing and construction, in August 22, just 2 months ago at this point, we actually reached a record high for construction employment in the state of Wisconsin. If you go back to what the housing boom looked like, we peaked at around 130,000. We're now at 133,000 and rising. Overall, housing construction in the state of Wisconsin surged coming out of the initial stages of the pandemic when mortgages were very inexpensive. So far, we are seeing some fading, but we're still at this point well ahead of year-over-year levels, and in particular, still far ahead of pre-pandemic levels. So even if the pace is slowing down on us, it's still at a very high level for us. We can see it in particular, for example, on our home construction, single-family home construction. We're running at about 12,000 units a year. That's up from about 11,500. If we were to compare ourselves to the state of Illinois, we've actually been building more single unit homes than the state of Illinois since about 2017. As their population has been declining and ours hasn't, that's probably what props up these kinds of differences. Now, we are seeing easing in home prices right now, but because of limited supply of inventory for houses to be sold, lots of people have retreated to the sidelines because of mortgages, and people that would have turned over their houses haven't. So the inventory is low. That's keeping prices up higher than you would have otherwise expected. We've seen some retreat, but it's still at a very solid level. Commercial values for the state of Wisconsin did not falter at all during the COVID contraction, and we probably had our best year ever in 2021. You illustrated here the changes in equalized commercial values, and that's, as I said, the strongest, at least since the probably ever, because we're going back to the early inflationary periods. For non-residential construction, the state of Wisconsin's basically been matching the US since about 2010. We did better than the US in 2020. We're a little less than 21, but overall pattern since 2010 is we've caught up and are basically keeping up with it. Again, if we contrast that situation with the state of Illinois has not seen substantial increases in commercial non-residential construction, even though we have. For manufacturing in the recovery, manufacturing is roughly still positive. Illustrated here is the Purchasing Managers Index. While the pace of manufacturing has slowed, it is still in a positive position, which is basically if it's over 50% by the Purchasing Managers Index, which means more than half the manufacturers are reporting expanding employment, expanding sales. We are still in that position. While it has slowed down, it is still expanding at this rating. In particular, same is true for Wisconsin, which is the Milwaukee Index published by Marquette's Institute for Supply Management. Total industrial production is above pre-pandemic levels and still rising. So we had full recovery more than a year ago, and we're still getting some gains. Part of what's holding back manufacturing at this point is still issues with supply chain development, particularly in the auto industry, but anything that uses electrical components is facing those same kinds of situations where you're constrained by both parts and labor. And as those are sort of resolving themselves, industrial production is responding. For total manufacturing, your sales actually hit record highs in second quarter 2022, and the same is true for net income after taxes. To me, the bigger development is what happened to Wisconsin manufacturing real GDP. Wisconsin manufacturing real GDP hit a new record in fourth quarter 2021. If we go back to what was fourth quarter 2006, Wisconsin real GDP did not recover to that level until a full 13 years later, which would have been early 2019. But you can see the sharp impact of the COVID contraction. And now this rather substantial recovery coming out of it so that we hit those newer levels in 2021 fourth quarter. Partly what's driving that is our exports have done really well coming out of the COVID contraction. As of July 22, we're up for our 12-month total. It's up 19% over July 2021. So it's clearly our ability to compete and export has improved substantially. Another factor has been as those supply chain issues have stuck around, there's been an emphasis on sort of bringing the supply chain closer to domestic production so that you're seeing stronger efforts on reshoring. Illustrated here is basically those states that have announced new job announcements for first half of 2022. And basically, if you're over 5,000, you're illustrated here. If you're not over 5,000, you're not illustrated and it's blank. Notice, for example, the entire West Coast versus, for example, the state of Wisconsin at over 13,000. This is from reshorenow.org. Now we get into issues of labor markets where we are in fascinating territory. By the household survey, which would include remote workers plus the self-employed plus family workers plus agricultural workers, we actually have employment running slightly ahead of pre-pandemic levels at this point. We're roughly 23,000 ahead. Our unemployment rate is most recently 3.1, but we did hit record lows earlier in the year at about 2.9%. In terms of the recovery of job losses measured by employers, we haven't quite hit that yet, partly because, as you'll see, we're dealing with labor shortages that sort of prevent some of the hiring, and some of those job losses in terms of trying to get them back are highly structured and highly located in particular industries. Almost all of the fall off on the private sector side is isolated into two industries, one of which is leisure and hospitality, as the restaurant trade is still trying to come back, and the second of which is healthcare. Particularly residential care facilities have not been able to hire back to prior levels. For our labor force participation, our labor force is actually ahead of pre-pandemic levels at this stage. For most of the year, we've been running ahead of pre-pandemic levels in labor force participation. August was a little off. That will probably change going forward. Overall, if there is a story, it's that Wisconsin labor force is more engaged than the rest of the country. And I don't care how you measure it, whether it's by gender or ethnicity. Our labor force participation rates are higher than the US for 2021. If we do it by age group, it's also true for every age group. In particularly, notice for us in the state of Wisconsin, we are far more likely for our younger workers, those 20 to 24 and teenagers, to be engaged in the labor force than the rest of the country. For the prime working age population, we have the 6th highest labor force participation rate in the country. That's the group that's 25 to 54. If we take a step back and do a 2 years on in the pandemic, and this would be the change in employment from the household survey, comparing what was the results in February 22 versus February 20, those areas in green by county show gains in employment. The areas in red show declines in employment. We are among the sweet spot with predominantly green, I'm sorry. Overall, for population, we've gained from domestic immigration. That's not true for most of the Midwestern states. We are surrounded by Illinois in particular having a rather substantial loss. This is from the annual population estimates. It's sort of buttressed by what we see in formal surveys from MOVE data. States ranked by U-Haul traffic, we're 13th in the country overall, which is fairly solid. And you can compare that to Illinois, which in terms of net moves is one of the largest destinations out. Of the top metropolitan areas listed as inbound destinations, Wisconsin has 2 of them. Both Madison and Milwaukee were listed in the top 25 of metro areas. More recently, there was U.S. Bureau of Census back in March released sort of what are their estimates of net domestic migration for per 1,000 residents. So basically, where are people moving to? The dark green territory is where people are moving to. And for us, that is basically sort of the area surrounding Milwaukee and northern Wisconsin, sort of even central Wisconsin are some of the big destinations for inbound movement domestically. And you'll see part of that reflected in the changing in the property values. Precisely where you saw those gains in people moving in is where we see some of our stronger gains in property value, sort of north Wisconsin, particularly northwest Wisconsin and the central part of the state. Partly, one of the things that inspires people to move is that we have a relatively affordable situation. If you can live anywhere, living where life is more affordable makes sense. We have 29th in terms of overall cost of living, 7% below the US average and below both our Illinois and Minnesota. That has the property of, if we have lower cost of living, how does that change our real per capita purchasing income or purchasing power? That puts us above the US average compared to, for example, California, or in particular, for example, Texas. So the overall standard of living is in Illinois, in Wisconsin, actually even better than the state of Illinois, just to our south. There is another feature that I think was not well reported, and that is the Census Bureau 3 weeks ago reported poverty measures, and this one is the supplemental poverty measure, which includes roughly what is your income, what are all the efforts to relieve the poverty, whether it is supplemental nutritional assistance, or in our case, earned income tax credit or homestead tax credit. And then you adjust that by cost of living. And so you get a sharper way of determining which part of the population is in poverty without assistance or insufficient assistance. We are down to only about 5% of the population. That's the second lowest in the country. Compare that, for example, to California, which is more than 2.5 times what our rate is. Now, labor markets are still tight across the country, even though you see some improvement. Job openings have been over 10 million since June 2021. So over, at this point, 15 months, you've had job openings nationally over 10 million. That's 4 million more than they were before the pandemic hit it. Where the biggest shortages are exactly those areas where I was suggesting we had issues recruiting or hiring into for employment that is healthcare and that is leisure and hospitality. In the state of Wisconsin, we have over 200,000 job openings. And again, that's been consistent since June 2021. At this stage, if we were to take the number of people that we have job openings for and subtract from that the number of people that are unemployed, we have 112,000 more job openings than we have people to fill them. That's twice the level we saw before the pandemic. So if we had every unemployed person in the right skill set, in the right location, in the right industry, we would still be short 112,000 people. Indicative of how tight the labor market is, in last week's release on unemployment and initial claims published by the United States Department of Labor, we're looking at the lowest number of persons that are claiming unemployment compensation than we have ever seen in the state of Wisconsin. That's the low. This series goes back to 1987. The economy's added more than 1 million in terms of its labor force since then. Even regarding that, it is the lowest absolute number that we've ever seen. And on the right, you can see the contrast between where we were in September 20 with 128,000 people on unemployment. Now we're down to 14,000. When you have tight labor markets, you get wage pressure. Wage pressure overall is the highest it's been in 21 years, particularly in those industries with the largest labor shortages. All right, next point of interest would be Wisconsin entrepreneurship, particularly for small business. Coming out of the pandemic, entrepreneurship in the state of Wisconsin surged. There was a substantial increase in the number of business formations, and people that are on their own, which is on the left, which is all types, but on the right that are actually have payroll and employees engaged, you're also seeing that large increase. And we haven't seen a letting back on that yet. It's still running very strong. The total number of businesses in Wisconsin rose sharply in 2021. And if we take the further on, how do we compare relative to the rest of the country in terms of the number of businesses operating on the ground? We are matching national rates. So if you remember that old line about Wisconsin trails and startups, I don't think that's true anymore. We're seeing a huge surge in the number of businesses operating on the ground. What is driving our surge is actually small businesses. You can see on the right the change in establishments by firm size. Most of the big gains are in the very small, but even now in sort of mid-sized businesses, we're getting gains in total firm size. And this would be first quarter data compared to prior year. Overall, the number of private establishments in the state of Wisconsin are outpacing all of our surrounding neighbors, whether it's Illinois or Minnesota, also true for Iowa and Michigan. Now, U.S. economic outlook, here's no surprise. We're looking at slower growth, higher prices, higher interest rates. Illustrated here is sort of the Federal Reserve's outlook in terms of where they expect the economy to be. And we can see how the situation has changed over the last 12 months. A year ago, they were looking at this year having about a 3.8% growth rate. They're down to about 0.2%, basically growing, but at a very low rate. You'll see that the inflation rate has popped up significantly, and you'll see more importantly in the lower right-hand corner of the box that shows how they are expecting interest rates to unfold going forward as they try to bring down inflation. We're expecting our federal funds rate to be up a good up to 4.4% by the end of the year, which is suggesting there are still more rate hikes on the way and a little more after that in 2023. The yield spread is suggesting that as the Federal Reserve tightening, the risks of inflation have raised because they're still expecting it, basically lifting interest rates by 150 basis points, but at slightly less, 25%, it still suggests while there's a heightened risk, it's not necessarily imminent. What you will see is slower economic growth. Basically, we can see the bring down of the overall growth pattern into the 1.5% territory, substantially down from the 5% we saw in 2021. We are expecting industrial production to be solid, and so we're still seeing year-over-year gains, not as sharp, but we're not expecting to decline. For Wisconsin, as we recovered in our real GDP by fourth quarter 2021, for our most recent quarter, 21-22, if we look at year-over-year rate, we sort of match the national average. We're at about 1.8%. That is particularly stronger, for example, than Minnesota or California. We're expecting our outlook real GDP to continue through 2024, but at a substantially reduced rate, about 1.5 this year and about 0.8 next year. That's fairly consistent with what you saw on the Federal Reserve outlook. Overall, our unemployment rate will be at record lows this year, increasing slightly as labor force and population continue to decline, but in the face of a slowing economy. We're expecting labor force to continue expansion given all the other trends we've seen. Household employment will follow with it. In terms of non-farm employment, we're expecting full recovery in 2023 and add on in 2024. Personal income, total personal income in 20 and 21 were supported by the stimulus funds. As that phases out, we would see a decline, but the good news for us is on the wages and salaries. We had a good year in 2021. We're expecting another good year, and basically consistent with our collections data, we're expecting strong wage and salary growth this year yet before it phases down as inflation winds down in the face of a slower economy. All right, that's it. I can now hand it over to Emily.
Hi, everyone. Give me just a second. I'm going to pull up my slides. I'm going to be talking today about some of our data visualizations that we have. I work in the Division of Research and Policy, and we are trying to make more of our data visible for everybody to use. So here we go. So where can you find the data visualizations? The shortcut is just dorviz.wisconsin.gov. The data visualizations kind of follow two main trends. We look at a lot of our tax data, and we also look at just economic data about the state. And if there's ever anything that you want to see that we don't have, always feel free to send us a suggestion. We can't do everything, but we'll do what we can. This one here first, I'm just going to give a couple examples of some of our data visualizations. This one is on equalized values. John mentioned these in his slides. And this is kind of a fun data visualization because we have information on every single municipality in the state of Wisconsin back to 1984. So it's got a whole host of information. The pie chart here is just showing you that residential values, which is the blue, make up the bulk of equalized values in Wisconsin. And then we also have that there's a graph, a map of the different counties, and that's just the share of equalized value by county. Kind of fun to take a look at. This next one here is our state fiscal dashboard, and this is very similar to some of the pie charts that Secretary Barca showed us at the beginning. There's
Emily,
actually a lot of information here.
If I can interject for 1 second, it doesn't look like your slides are advancing.
Okay, let me get out of the advancement here because sometimes that doesn't
Now we
work.
can see it.
Now? Okay, so this is the state fiscal dashboard, and this is just one view. We actually have quite several different views within this, so you can kind of drill down to the different both expenditures and the revenues, and we do have data back several years, as you can see kind of on the colored chart on the right there. The next viz I want to take a look at just real quick is individual income tax credits is what this one is called. But I actually like this one not for the detail that it gives on the credits, although that is interesting, but it also gives information on the income and then the tax paid by county level breakdown. So you can kind of see, you can see on the map here, this is the actual income that is claimed per return by county. So you can kind of see the blue counties there are Ozaukee County, Waukesha, Dane, and then also St. Croix up in the Northwest. And so those actually have the highest income per return out of the whole state. You can also look at some different measures of the income tax credits on that one by the county. Another one here, this is sales taxes by industry. And I really want to emphasize that this isn't total sales, but this is taxable sales. So if you go and buy gas, there's not sales tax on top of that gas purchase. So that's not going to show up. That doesn't play into these numbers at all. But you can see there the blue pie chart, or the blue on the pie chart. That's nearly half of our total sales tax revenues that comes from the retail sector, which probably isn't a big surprise. Now, this is at the state level. We do have information at the county level for all the counties that have a sales tax that collect, the 0.5% sales tax. And then we also have it by even more detailed level at the state level. So you can not only look at retail, but you can look at the individual retail categories. For instance, car sales is probably our biggest sector. You can kind of see how that has moved. It's kind of fun to see how those have moved through the pandemic as well. Taxable sales at restaurants, of course, plunged in like March and April of 2020, but have since rebounded. So it's kind of fun to take a look at all of that. Another visualization that we have here, this is the Wisconsin Economic Indicators, and it kind of just shows a lot of basic economic information for the state. And this is updated about twice a month, so it's pretty up to date. So this view here just shows Wisconsin employment, it shows total non-farm, manufacturing, and then private employment, and then the last one there is the unemployment rate. We also have a lot of other measures on the economy, such as inflation. If you go through some of those, you can see how the CPI inflation measure has changed. We also have some housing market indicators. And also we have exports, average gasoline prices, even the stock indexes. So you can kind of take a look at that, see how the state is doing in the economy. So this again is just a sampling of a lot of the data visualizations we have. I'm only highlighting 5 here, but we probably have 20 or so. We do have a detailed one on exports, so you can see an international map where all of Wisconsin's exports go by industry, by year. So that's kind of another fun one to take a look at. Check them out whenever you get a chance. And again, if you have any questions, you can email us, and you can find all the visualizations on our website. So that's it for me today.
Thank
Derek,
you,
I will
Emily.
turn it back over to you.
Yes, I think we've reached the question and answer segment of the program. One of the first questions we had was, can you re-show the equalized values slide that we missed? Emily?
And so there it is. Can everybody see that?
We can.
Okay, good. So yeah, this is just one view. Again, we have different maps and different charts that you can look at. So this is just one of maybe 6 or 7 views on the equalized values.
Great. Thank you for that. And as I said, we've reached the question and answer segment of the program. There are no questions other than that one that are waiting in the chat. So if folks would like to, you can submit your questions in the chat. You can also feel free to unmute and ask your question verbally if you would prefer. Any questions?
Actually, Derek, I have a quick question. Are we sharing these slides with everybody in the presentation?
Yes, that would be my intent. And also,
Okay.
just to foreshadow, is the presentation will also be made available on DOA's social media channels, including YouTube. So if folks would like to either go back and see different parts of the presentation, or if you know somebody who would like to have attended and could not, this would be the opportunity for them to do so. And I believe it's also being live streamed on Wisconsin Eye.
Okay, I just want to bring up that from the presentation, you can click on any of those images from the visualizations, and I'll take you directly to that data viz.
And again, just so I have the link correct, Emily, it's dorviz.wi.gov/.
Yep, that's right.
Okay, thank you. All right. And again, any questions from anybody? Going once, going twice. Okay, we did get one here. John, I think this one is for you. You show the slides with the stimulus benefits versus none. If we slow down again and there is no stimulus, would you expect it to be worse?
Would I expect it to decline would be the relevant question. I think that it will depend on how it unfolds. Sort of at the moment we're expecting it, basically every discussion I've seen tends to suggest even if you're down, it's not going to be as catastrophic as that was. So relative to, that's partly why I was setting up the context. The COVID contraction was so bad, you basically had to be in a position, let's try everything. Even if I think you were to get a slowdown, I don't see that unwinding. I mean, we would see something akin to it again if you're in sort of a Great Recession type situation or a COVID contraction situation, because I don't think people will allow it to unwind like it did. But failing that, I don't see it on what I would call the immediate horizon, but I don't think decision makers would sit on their hands and face the comparable experience. They would intervene again at that stage.
Thank you, John, very much. Does anybody else have any other questions? Again, you can drop them in the chat, or you can also feel free to unmute yourself and ask your question verbally if you prefer. Okay. Again, seeing no other questions pending. One of the questions that was posed is, could they get a copy of the presentation? I believe, yes, we'll go ahead and we can send out a copy of the full presentation to folks who attended. And unless there are any other questions, which I don't see. Okay. Well, I want to thank everyone again for participating in this afternoon's webinar, and I do want to give a special thank you to all of our presenters today for taking the time to go ahead and walk us through a lot of this great information that hopefully folks can use, especially in terms of businesses, to kind of plan out their future, to kind of know what our overall outlook is. And as I said, a reminder, we will go ahead and make this recording available on the DOA website and on DOA's social media channels, including our our YouTube account. And I want to thank everybody again for participating. Have a wonderful day and look forward to seeing you again soon. Thank you.
Thank you.
Thank you, Derek. Good to
Thank
be
you.
with you all.
Thank you.